Katrina Ell, who is Director of Economic Research at Moody's Analytics, is joining us this morning. Katrina, thanks so much for taking the time. We've spoken at length about what the Fed did, but I'd like to talk to you about how you see this progressing heading into the end of this year and starting of next year. What do you make of the move? It was largely along expected lines. What else happens towards the end of the year, though?
So that's exactly right. The decision overnight was exactly as expected with that 25 basis point cut. And our baseline still assumes that we do get another 25 basis point cut from the Fed in their December meeting. So that brings cumulative easing this year to 100 basis points. It's quite substantial, but it also goes to show the fact that, the inflation data, the labor market is all moving in the right direction to make sure that the Fed really has that comfort in terms of taking rates out of restrictive territory and moving them eventually back into more of a neutral range. But I think what we've seen coming out of the US election result is that it does throw a lot more uncertainty into the ring for 2025 monetary policy and particular fiscal policy as well. We just don't know at this stage how aggressive Trump is going to be with his stated policy agenda, what the priorities will be, what the timing of those policies will be. And so I think, members of the Federal Reserve, as well as economists, as well as everyone else, will be watching closely for what his, policy moves and what his kind of statements will be for just some guidance of what we're going to expect for the economy, not just the US economy, but how it's going to influence the global economy next year.
Okay. So would you say, given that we've just had this major event of the US president being elected, do you think that his policies could govern the way that the economy functions? Of course it will, but does that change your baseline projections heading into next year as well?
It does, but at this stage, we just don't have the clarity on exactly what they should be changed to, because that, the direction of policy that he's, stated previously in the campaign trail that will be his priority. We just don't know how around implementation it's going to turn out in practice. So we're really hoping over the next couple of weeks, we'll get a lot more clarity on that, and whether it's going to influence Fed decisions or not, we just don't know at this point. So I think it's really important at this point to just be like, we don't have that sort of clarity yet. But I think at this point, the strong financial market reaction is, particularly in the US, is indicative of the fact that Trump has promised corporate and household tax cuts. So at least in the near term, we do know that there will likely be more of a fiscal stimulus in the US. So we are, most likely going to be looking at stronger US GDP growth next year and slightly beyond that as well.
Okay. Katrina, the other moving part that we've not addressed yet, and we haven't heard yet, of course, we're waiting for the update from the China NPC this morning. What's expected on that front, and how could a slower than expected growth in China, how could that affect the globe as a whole? Where do commodities move, in your opinion, based on that expectation? And do you have any specific expectations for India?
So our expectation is that, of course, we know that China is a target of the trade policies, and it's likely going to be impacted by tariffs coming under a Trump administration. And so we do expect that China will continue on its current path and probably ramp up a bit of the fiscal and monetary stimulus that it's been delivering, particularly over the past couple of months, to increasingly try and support its industries in a global environment that's going to be much less supportive. And so that's our expectation going forward. When it comes to India's growth outlook, India, it doesn't seem at this point as vulnerable to a Trump administration on the negative side as what China has been. India is much more exposed on the service export side, and Trump has really made it clear that manufacturing, particular higher value add manufacturing, is a target of his administration. So that's a positive for India. And, if we're going to be making downward revisions to any economy, China would certainly be one of those that's experiencing more downward revisions, much more so than India, which is also less export oriented. It is more domestic focused economy, which is potentially going to be working in its favor as well.
Katrina, thanks so much for taking the time. It's a great pleasure speaking with you this morning, and thanks so much for the perspective you gave us.